somebody said that, hey, these banks are failing. Isn't credit contracting as a result of these bank failures? And so does that mean that maybe you don't have to raise rates as much? And he basically said, yeah, to that. He said that it's possible because of this situation that we may not have to raise rates as much as we might otherwise would have if none of this happened, right? So he didn't say we're going to stop raising rates, but he did say that they may not have to go as high because of the unspoken financial crisis that is now taking place. Now, the reality is they're actually going to go even higher because even more inflation is going to be created by the Fed in order to bail out the country and the banking system and everybody. And so we're ultimately going to have more inflation, which is going to mean even higher rate hikes. But those rate hikes are coming later rather than sooner. So he did point out, though, in talking about wages, that he didn't think that wages were the principal driver of inflation, which is almost correct. It's not that they're not the principal driver. They're not any driver. Wages going up don't cause inflation. Inflation causes wages to go up. That's the order. Wages are the caboose. Inflation is the engine, right? So it's inflation that drags wages up. Wages don't push inflation because inflation is coming from the expansion of the money supply, the devaluation of money, prices rise, including wages. And of course, the way it generally works is the price of goods and services goes up first, and then wages go up later. And so there's a lag, but the workers are always, trying to catch up to prices that are rising faster than the price they get when they sell their labor for wages. So somebody asked Powell, and this was, I think, a key question that also weighed heavily on the markets. The reporter asked Powell, are you going to rule out rate cuts like later this year? Because the market is anticipating rate cuts. It's already baked into the yield curve that the Fed's going to start cutting rates, well before the end of the year. And why does the market think the Fed's going to cut rates? Well, because we're going to be in a recession. And eventually, the labor market's going to break in a bigger way than it already has broken, but nobody really wants to acknowledge it. So the markets are looking at this recession and thinking the Fed's going to cut rates. Now, they're right about the recession. We're going to have a recession, and it's not going to be mild. And the way the Fed has reacted in the past to recessions, mild or not, is it cuts rates. So the markets expect the Fed to do the same thing. Well, Powell came out and threw cold water again on that expectation by saying no. The Fed has no plans to cut rates. Even if they stop hiking, they're not cutting. Rates are going to stay where they are. He said it would be very inappropriate of the Fed to cut rates, even if the labor market softened because it's coming from such a strong level. Unemployment is so low that the overriding factor is how high inflation is. And he admitted again that inflation is not going to come down quickly, and that anybody who thinks it's going to come down quickly is wrong. He thinks inflation will come down, but it's going to be slow, and it's going to take a long time to get there, and therefore the Fed cannot give up on its policy, and that rates have to stay high. Now that, I thought, was one of the most bearish comments for the markets, because to the extent that the markets start to believe the Fed is more resolute and it's going to keep rates high, come hell or high water, the markets have a long way to go down. What's interesting is that didn't send gold down. That sent stocks down, didn't send gold down. Gold went up. Gold stocks, they didn't soar, but they had a positive day. And that is in contrast to the way the markets had been responding to that type of talk, that type of hawkish, tough talk on inflation fighting didn't go over well in the gold market. It scared the gold market. It ain't scaring it anymore, either because the market sees through the bluff or they see through what happens as a result of this, which is talking tough about inflation, which hurts the markets, the banks, and the economy, guarantees more inflation because ultimately, it doesn't matter what the Fed's saying now or how tough they want to pretend to be. When it gets right down to it, when everything is imploding the way it was in 2008, the way it was in 2020, we know what the Fed's going to do. It's not going to matter how high inflation is. And in fact, somebody's asked Powell if he would accept 3%. And in a roundabout way, he basically said no. He said, we're not settling for 3. 2's the number, right? We still want inflation to be 2%. So no, we're not settling for 3%. If we get to 3%, we're going to keep on fighting. If we have to hike rates to get from 3 to 2, we're going to hike rates, even if the economy is softer, even if we're in a mild recession. Now, again, we may be in a protracted, anything but mild recession. We may be in a depression, right? Unemployment can go way up and inflation can still be way above 3%. And again, what about getting the average, right? I mentioned this on my last podcast. If Powell is admitting that it's going to take a long time for inflation to get back down to 2%, how many years is that, by the way? And then how many years of sub 2%? How many years of 1% inflation or 0.5% inflation will we need to get that average down to 2%? Of course, that's never going to happen, right? They already tossed that policy in the trash can without ever bringing it up again. They're just hoping everybody forgets about that, right? That, I didn't forget about it. I'm reminding them. But they're hoping the world forgets that they ever introduced the concept of inflation averaging, because they're never going to try to do that. I mean, they're not going to try to average 2% inflation. They know that's never going to happen at this point. The average is going to be way above 2%. They're just trying to say that at some distant point in the future, after prices have gone way up, they're hoping that they eventually slow down and only go up at 2% a year. But I don't think we're going to see 2%. I doubt in the lifetime of Janet Yellen will we see a full year where inflation is just 2%, even the way the government measures it now. Now, maybe if they dramatically change the CPI, maybe they can make it happen with that kind of sleight of hand. But with the CPI we got now, as bad as it is, because that probably means that if inflation is 2%, according to the CPI we got now, that means it's 4%, according to the CPI we had in the 70s and 80s. I don't even think we can get there. I don't even think we can get down to 4%, because that's how big this problem is. That's how much inflation is already in the pipeline. And there's no way Congress is going to cut spending. Even the spending cuts that the Republicans proposed as part of their debt increase that are dead on arrival are too little to make a difference. So even the Republicans, right, who supposedly want to cut spending, aren't willing to cut it enough to actually make a difference. And they're not willing to cut anything that will make a difference. The Republicans aren't cutting Social Security. They won't cut Medicare. They won't cut national defense. They can't cut interest on the debt. Nobody wants to talk about cutting the entitlements. And so the minute you take entitlements and national defense, off the table, it doesn't matter what you do with the rest of it. The cuts can't possibly be deep enough to change the dynamics. And of course, as the debt is exploding, the debt is growing much faster than the economy. So the problem gets bigger with each passing day. And so we can't solve it now. It becomes even more difficult to solve tomorrow, because every day that goes by where we don't do something, we make the problem that no one has the guts to solve bigger. And the bigger the problem gets, the scarier the solution is. And so the less likely we're going to adopt one. And so I know that the end game here is going to be collapse. It's going to be runaway inflation.